Welcome to our weekly market analysis. This analysis is for the week of March 16th, 2024. I hope everyone is having a wonderful weekend. In today's three-part analysis, we're gonna look at some of the events that shaped the markets last week, but also most importantly, what will be upcoming events that they will help us. Also, we'll have some analysis and lessons that I hope you will find them helpful. The most important thing I think that the world is looking at is the FOMC meeting, which they will come with a conclusion on Wednesday. But also, I think the markets are paying attention to Bank of Japan, which starts on Monday, but it's Tuesday. We'll find out what they're going to do. We're going to leave the rates the same, or is this, I've said before, could this be a changing point, an inflection point? Also, we've noticed that there's a rotation. We've had the Magnificent Seven, but some of them are not as magnificent as they used to be. When you look at Google and the Teslas and the Apples, we see that past week we had rotations to the energy and more defensive, actually, the consumer staples, for instance, and materials. So basically, there has been this rotation. Also, I think we are in a very important area for the bonds. We will look at the TLT ETF. We will analyze that in our trade of the week and look at where we stand. I think that's very important because the bonds, the interest rates will dictate the technology. They will affect the precious metals, they affect the futures and the commodities. So basically, that is, I think, something that you should pay attention. And speaking of that, we also want to look at the commodity index and see what they telling us, and that will be on our lesson of the week. Remember, Friday was a crazy day. That was with the enormous amount of volume and options, because it was, as we have spoken last week, it was a triple witching Friday, and there will be rolls. They had to be the new ones, new options rolling, old options rolling, new options buying. So it was a pretty exciting day in that point. Also, what is the transportation index is telling us in the last couple of weeks? So we will also look at that chart. One thing I just always like to introduce once in a while, as far as a new technology tool, there is a tool, the Chandelier Exit, which Alexander Elder, he used it in his book, I believe, Coming to My Trading Room. And just introduction, see if you like that to add to your itinerary. All right, with that in mind, let's look at the economy. Now, the big news last week was that CPI numbers, and it came a little, actually, it was in line, but the core inflation came a little hotter than it was expected. Now, the markets kind of shrugged it off, although some of the increase for the month, it came from higher gas prices, and also because of the again, oil prices, I think about up 2.9%. But the main culprit, when we look at the core, it was the rent, which again, it came higher than expected. But the super core was what was concerning, and the super core strips the housing, it strips the food, energy. And what we saw with the super core was mainly on, of course, it's the service areas. Airfares were up, insurances were up. So that's what it affected. So keep that in mind, that again, FOMC is meeting this coming week, and PPI also became very concerning. And I think the market shrugged that off, but Thursday they couldn't shrug the PPI off. And as you can see, they were up 0.6% compared to 0.3%. and the core CPI was 0.3% compared to 0.2%. One of the culprits was in this situation was the transportation, for instance. So that's something that, again, we want to pay attention, because, again, the market had taken this idea that, well, the Fed is going to start reducing rates, but with these numbers, I think the Fed is going to be on hold to see what action they have to take. So we are going to get to the dot plots. We're going to see what they have to say, what the Fed members are forecasting. Will there be the 3 cuts that it has been messaged, or will there be 2 cuts? When would that be? So anyway, this is for you see where we have been as far as the consumer price index, CPI, and the PPI. Upcoming week, as I mentioned, I would pay attention to the Bank of Japan press conference and their rate policy. So we want to see, again, is it going to be negative 0.1? Is that they're going to keep it at that? And upcoming week, as I mentioned, I will, the Great Britain's CPI is important, but of course, all the eyes are on the FOMC and the statement in the press conference, which will be at 11 Pacific Coast time. And we can see how the spread still, we got inverted yield curve of about 42 basis point. So the long end is curving up. So the rates have gone up on the long end. As far as the market, we've had, obviously, we've been up like 15 out of 17. Last week we barely went down, and this week these are not big down days. I mean, it was Thursday and Friday really what happened. We hit the all-time highs, and so the Dow was only down like maybe 0.5%, and Nasdaq about 1%, and S&P, we will see that magic, that 5117, so it's down 0.65. So as a whole, though, the general markets, the total US market was only down 0.34%, and large caps, the value were really flat. The small caps, especially the growth side, they did get hit harder. And what is happening with the sentiment? The sentiment still is pretty positive, above what the averages are, although it's a little less than what it was. Again, there's a little concern what the Fed is going to do. But the bears are not coming out. They are in a kind of hibernation, and they are way below where the averages are. When we look at the CNN Fear and Greed, this is as of Friday, we see that we're still in a higher end of the greed. So where are we as far as the markets? We can see there's been a digestion last week. We've looked at the 5,111. We did, as I've said it before, that 8-day exponential, and then we look at the 21-day has been such a good support. So where are we now? You're right sitting at the 21 day, although like sandwich between the 8 and 21-day exponential moving average, and you're right on that 200% Fibonacci. So crucial. So we want to see, will we breaking down below that 21, and will we go to the 50-day moving average? We see that this volume here, tremendous, right? So that was a triple witching we were talking about. Also, when we look at the linear regression channel, we see that generally, especially again from the beginning of the year, it's the 3 months, we haven't had more than 2 red candles in a row. Now, this is Hakinashi, so again, it looks at the day before, but you see we've had individuals. So that's another thing I'd like you to pay attention. MACD has been pretty flat to the downside. It's indecision, so we don't have momentum. So there's a little indecision, and they're getting close to that -1 standard deviation. As far as the Bollinger Bands go, as you can see, they are narrowing. The Bollinger Band's band is the width is getting smaller, and we are really touching that upper band, but we haven't violated too much, and they're sitting right above the 18 days. NASDAQ was the one who actually um, broke down, and it is more, you mentioned about the Magnificent Seven and then the top technology stock. So, with the Adobe news and NVIDIA has been really back and forth. We will talk a little more. So we see that we broke under the 18-day moving average. So if you recall last week, we were looking at this, there was the divergence, the stochastics had gone down. So the momentum is to the downside and MACD has crossed. So that's a food for thought. And on the other hand, also, when we look at the squeeze, what we can see based on the LRC, we have broken below the 21-day moving average. And as I mentioned, not many red candles, and we have not 3 red candles that it's a little unusual in recent months with that strength. So would we go lower, perhaps Monday and Tuesday? Would that happen? And then would we get some clarity on Wednesday? So that's, again, there's no reason to short the markets, but there's also, it gives us that could this be a little correction and some profit taking. And as I mentioned, it's the rotation, right? So the Russell Thursday was affected very much after the PPI numbers came, and now we have put a doji, but we have broken below that 18-day moving average. So we need confirmation. As you can see, stochastics and MACD have also to the negative. Dow, again, bandwidth is very narrow. We are below the 18-day. And momentum is downward. And when we look at VIX, it's pretty flat. We did the upper edge, and now we are right on that 18-day moving average. And momentum is not oversold. We are under the 50, but it has turned a little bit. But again, VIX is not as predictive as it used to be. On the other hand, the volatility of VIX is showing us there is volatility in the option pricing, and we are right outside the Bollinger Band when it comes to that. So what happened to the yields? The yields, they've been very attractive. They've been down, and then we hit the Bollinger Bands. We were oversold. MACD cross. We talked about this last week. We thought we can, that 100-day moving average could be our resistance, but we have broken above that. We will go in more details when we analyze the TLT. The opposite, as you can see, the 10-year, we had a nice run. We hit the Bollinger Bands. We broke below the 18, and as well as you can see 100. They have really they are like on top of each other, and the momentum has been down, and MACD just crossed. So we want to watch that. The 30-year, on the other hand, is just sitting on this 100-day moving average, broken below its 18 days. So this is something, again, the concerns with the PPI numbers, the CPI numbers, and of course what FOMC is going to do. The dollar, as you can see, the opposite of what the rates are. And so it was attractive, but we are in a crucial point in the dollar as well. We've talked in the past, I've said it's like 101, 105, and we are right against the 18 and 100-day moving average. And granted that stochastics is pushing higher and MACD is trying to kiss and move higher. But right now, this is crucial, especially 18 is trying to cross the 100. So it's going to be stalling. And of course, this is something, again, waiting to see what the interest rates are going to do. When we look at the weekly also, we see on a weekly basis, well, the momentum is down, the MACD is flat. We are sitting right on 18 and 100-week moving average. And you see the Bollinger Bands are narrowing. And then when we look at the euro, opposite of dollar, dollar was against the 100-day moving average, and 18 euro is right sitting on it. Although you see the momentum is down. As far as the British pound, we had a nice run outside the Bollinger Band. And what happens? Every time we go through that and then we were overbought, we'd like to come to the next support. In this case, is the 18-day moving average, and MACD is trying to cross. Again, Bank of England also meeting, and they probably will leave their rates alone. But as far as the dollar goes, again, that's everything's like depending on what the FOMC also is going to do. So the gold, we've had this beautiful run. You see, we were out 1, 2, 3, 4. This kind of came inside and touched it. So we had to come, again, it's like 5 days outside the Bollinger Bands. So we are consolidating. We still embedded, although we are getting very close to become overbought, but we still technically embedded. So there hasn't been a lot of damage done. So it's more of a digestion in gold right now. On a weekly basis, though, we did go outside the Bollinger Band and come back right inside. And we are overbought from the weekly point. So be aware of that. As far as looking at, I want to look at it on a monthly. This goes back 15 years. And what you can see is we did have the double top and almost triple top. We have broken out of it on a monthly, but sometimes the markets want to come back, and we'll go back here. You see, we've had this double top and we have broken above that, but sometimes the markets do digest it and come back. So we need a confirmation. If we can comfortably go back above it, then things will be, technically the buyers will come in. So obviously we've had this nice squeeze on a monthly basis, and now we've had this nice run. So we are on a 1 standard deviation. So this is a time of decision. We are nicely above the 21-month moving average. Silver has been very strong. And you can see again, outside Bollinger Band, the Bollinger Bands are expanding. So that shows strength. We are embedded, and activity is up. And then we look at the copper, we see that copper has been strong. We are overbought and we are outside Bollinger Band. So as you know, my message is, even like we have 3 days outside Bollinger Band, I'll be very cautious in adding new positions at this time. I'd like to see the digestion before we add more. And especially on a weekly basis, granted, we broke above the 100-week moving average, but we are outside the Bollinger Band and we are overbought on a weekly. And Bitcoin did go outside its Bollinger Band, came back, it's digesting. We talked about, again, it had hit, we talked about the all-time high. It's more of a profit taking, but still it's pretty healthy. We are sitting above the 18-day. We are still embedded. MACD is still positive, so we haven't crossed it, but we want to watch that to see technically if they cross and we break below the 18, then we have to watch. But so far, we still have that support. As far as on a weekly basis, though, we see that we are above the Bollinger Bands, and we hit that when we look at the October 2021, we hit that time high, as I mentioned, and we have retraced. So this is more of a digestion, although we're becoming embedded, and MACD is positive. Crude oil, we talked about energy sector being up. Crude oil is up. Again, this is more of a OPEC and OPEC plus, and also what is happening with the Saudi Arabia, what is happening in the Middle East. On the other hand is, the non-OPEC countries, they're producing, so it's a supply and demand, right? So OPEC decide, we're going to cut the supplies, but the non-OPEC countries, and then we be thinking about Russia, for instance, and Iran, that they really have to sell their oil. So there is a supply. So but we did have this last couple of days, and so we went outside the Bollinger Band, but we are overbought in crude oil. And when we look at weekly, you can see that we are right against a 100-week moving average, and we are overbought, and we are headed against the Bollinger Band, although MACD is showing some strength. One last chart I want to share with you is the Reebok gasoline contract. So you see it's been very strong. It's 3 days outside the Bollinger Band, so be cautious. We are overbought. So this is one of the ways you can see what's happening with the gasoline prices. So also remember, when the May driving season comes, the prices generally go up towards that, or May, end of school is happening. But right now we are a little overheated in Reebok gasoline. All right, let's finish our segment with the expected moves and see, did we respect them? And we can see the SPX, yes, flat. We were flat to down on SPX, as you could see, about 60.65%. We did hit the upper edge. And then NASDAQ was a weaker one, said we actually parked right out on the lower edge. And then Russell, we had a bad Thursday, and then we came back and we closed right on the lower edge of the expected move. It was pretty flat for Dow Industrial. It was the bonds that, as I mentioned, the rates, it became a concern, and we way below the lower edge of the expected move. The dollar, opposite of the interest rates, it's actually opposite of what the bonds have done, had a little strength. And gold has been, it had been on fire. We hit the $203 on GLD. Still, last week we had this huge move. We talked about 3 standard deviation. This week we just sold, as I said, it's a digestion time, and we basically really floating around the lower edge of the expected move. Silver has been the strong one, and actually broke outside the expected move. Financials actually haven't done badly. They've been a nice trend, but they did hit their upper edge on Thursday and then closed towards the middle of the range. And energy was on fire, and that's a little concern with what is happening. So we broke pretty above this. So what you can see again, we look at the NASDAQ and we look at the energy, and we say, wait a minute, there is again some rotation. So with that in mind, I'll invite you to watch our second segment, which will be about emerging markets and lesson of the week. Thank you so much.